All right, well, good evening, everybody. It is September 25th, 2022. It is a Sunday night. Is it about, let's see, what time is it? About 8:50 at night Eastern time here in downtown Miami. So we are reporting live from the 200 Southeast Financial Center right here in downtown Miami. It was a beautiful day today, about 83 degrees, bright sunshine, not too humid, not too bad. It was pretty good, but hope everybody had a great weekend. Hopefully you are all rested and well prepared for the week ahead. Gonna be a busy week on Wall Street. So we're gonna get some key inflation data out. We are also going to be getting some key housing data that is going to be coming out. But before we talk about that, let's take a quick look at S&P 500 E-mini futures. So it looks like futures are down fractionally. I'd say about seven points on the ES. If we go to ticker symbol YM, which is the futures of the Dow Jones Industrial Average, we're down about 38 points. So pretty much flat. And then the NQs, which is the NASDAQ 100, looks like we're down about 20 points. So not too much action. There. I think the most important thing to watch going into tomorrow is the dollar, okay? So the strength of the dollar. The Dixie right now is exploding to the upside, trading at about 113. If we take a look at bonds, let's see where we're trading at in terms of the 10-year US Treasury, right where we were on Monday. So right at about 3.74%. So as we move into next week, as we get this key economic data out, check on the bond market, watch the dollar. What else did I want to tell you guys? Oh yeah, we are going to be ending the week with something very important, okay? So this coming up week wraps up with an August update of the Federal Reserve's favorite inflation gauge, that is the Personal Consumption Expenditures Price Index, or the PCE. That's going to be coming out on Friday morning, right? And consensus is that inflation should actually probably reaccelerate to about 4.8% in relation to its annual gain. Now, hawkish projections released Wednesday show that the Fed's key target rate is going to be rising to about 4.6% by 2023. Right now, we're roughly at about 3.25% after that 75 basis point rate hike. The projections seem to indicate that rate cuts won't be on the table until core PCE inflation falls 3% or lower. Now, here's the bad news. If you look at economic consensus, or many what economists believe, they think that that core PCE number is going to fall to that 3% target in 2024. So if we sort of think about don't fight the Fed, right? We shouldn't be adding risk here in an environment where the Fed is tightening, raising interest rates, running off that balance sheet. Now, let's just assume they're correct, right? Let's assume that PCE is going to come down to 3% in 2024. Well, we could be either in a sideways chop or severe bear market for years to come. So we'll talk about that. Let's not get too freaked out about it. But first, let's see who we have in the chat. And let me put my laptop away. I see Austin Howell is here, Mike C, Adriano Silva, CC is here, says hello, Tom from San Diego, California. Welcome, everybody. I see my friend Tone Rick. I see Lee. Good to see everybody. British Gray, welcome. British Gray is in Tampa, Florida, by the way. Hopefully you are preparing for the Hurricane Ian. The good news is it seems as if Miami, Florida is not going to be in the direct path of Hurricane Ian, but we are still praying for all of our friends in the Florida Panhandle and Tampa, Florida as well. So let me get my backpack situated, friends, and we will head downstairs. Just need to put my cup away. But the lights are off in the WeWork office tonight. I'll give you guys a quick tour, even though the lights are off. Billy says San Diego is checking in as well. Good to see everybody in San Diego, California. Hope everybody had a very restful weekend. It's going to be a busy week. And I think, correct me if I'm wrong, but this is the last week of September. How crazy is that? How crazy is that, everybody? We almost well, already have 3 months left in the year, October, November, and December. Another month down, another quarter down. So we'll get it done. I see Laytha is here. Good to see you, Laytha. Thank you for joining. 61, welcome. So let's go down here, lobby. A5, Sabrina Fair, good to see you. Hold on, sometimes my camera's a little bit wonky here. Ah, there we go. Sweet country living in Miami. Well, supposedly the hurricane's not gonna hit Miami, which is good news. Good to see you, Dan. It looks like the pathway of Hurricane Ian is going to hit the panhandle of Florida. So I think Pensacola, Florida, maybe things like that. All right, elevator or escalator's not working. Got the Metro Mover. Ah, here we are, friends. Welcome. Well, welcome back to another stream. It is a beautiful night out here in downtown Miami. We just left the 200 Southeast Financial Center right here. Now, this is the tallest office building in downtown Miami. I'll give you guys a view straight up just for some perspective here. Beautiful building. The 20th floor is where the WeWork offices are located. Now, if you remember back to the beginning of the last live stream, so last night, we were actually reporting live from the other WeWork office. And that was located in the one and only Brickell City Center. But tonight, what I want to do, everybody, is I want to walk past the Intercontinental Hotel, and I want to check out the view of the water, because before we started streaming, I was looking out the window and there was some pretty cool heat lightning storms, and I think it'd be appropriate to take a look at that. But I'll give you a shot of the Miami Tower. It is all lit up in blue and orange. I'm not sure why. Hey, Andrea says, hey Tom, I want to be in Miami already. Andrea, come on down, my friend. It was a beautiful, beautiful day here in Miami. You know, I spent the first half of my day in North Beach. So you could think about 72nd Street all the way to 79th Street. And I was getting a little bit of a workout in, went swimming, and it was a beautiful, beautiful day. 80 degrees, not too humid, and the water was crystal clear, very quiet. I guess you can consider it the quiet before the storm, calm before the storm. I see my friend Andy. Good to see you, Andy, from South Korea. Always a pleasure to have you here. Sabrina Fair, GX72, FredX. Hey, Laytha is here. This is the blue and orange for the Miami Dolphins. You know what, Laytha? I think you actually may be right. I think there was a football game today, right? Did the Miami Dolphins... I think they played the Buffalo Bills, right? I'm not a big football guy, but I think they did. Maybe you guys could fact check me in the chat. Did the Miami Dolphins play today? Mimi says, howdy Tom from Iowa. Good to see all of our friends from Iowa. DJ's Review in Under 2 says, hey Tom, greetings from Southeast Georgia. Good to see all of our Georgia friends. Brad says, I lived in downtown, in the downtown Miro apartments in downtown Brickell. Hey, very cool. Yeah, Brickell is a very, very nice area. We may go there tonight. But right now we are outside of the Intercontinental Hotel. And we usually have problems with the internet around here, so we'll see. 61 says, Tom, the Dolphins won. Very cool. Yeah, I think they're 3-0, right? Again, not a big football guy, but you know, since I moved to Miami, I guess I have to start to pay attention here. So this is the Metro Mover station. We are also overlooking 50 Biscayne. And here's another shot of the 200 Southeast Financial Center. This is the building where we just came out of. Beautiful building. I always love to see the Metro Mover going by, because being from New York, you know, I would say in Manhattan, obviously the subways are underground. Now, if you venture out to Queens, you'll have the above ground, but it's just looks a little bit weird and unique to have the trains above ground. Josie says, Tom, when is the storm coming to Florida? Well, supposedly, so here's the good news, and I'll give you the bad news too. So the good news is it looks like the storm is gonna pass Miami altogether. It looks like we're not even gonna have a storm in terms of hurricane status, right? So we probably won't have the 100-mile-an-hour winds, anything like that. What we will have is about 6 inches of rain. Now that's substantial. So if we really do have 6 inches of rain here in Miami, I could almost guarantee, I'll give you guys one more shot of the Intercontinental. I could almost guarantee if we really do have 6 inches of rain all at one time in the span of 12 hours, you're gonna have some serious flooding, especially in parts of downtown Miami and Brickell. Now, the good news for me is I really don't live in a area of Miami that really floods. So I think in terms of the state of Florida, where we have to be worried about is more along the lines of like the Panhandle, Pensacola, Florida. I think Tampa, Florida may have a little bit of it, but you know, supposedly the models that the meteorologists are looking at, tracking, whatever you want to call it now, it looks like the storm may miss Miami, which is good news for me, but obviously we don't want anybody dealing with hurricanes. They're very dangerous. Hey, Charles D is here. Hey, Charles, good to see you, my friend. Zozo Bomb says hurricane should be in Florida by Wednesday to Thursday. Yeah, it's probably gonna have the whole week be a washout, like a rain out. That's why, you know, if you can get out and about on Monday, Tuesday, I would definitely do that. But Wednesday and Thursday, I'm probably just gonna hunker down regardless of if we get a direct hit or not. But we do have some notable earnings to talk about. So I believe Nike will be reporting earnings on Thursday, as well as CarMax. But I think more importantly to anything else, we are gonna get some housing data as well. But we are going to get some key inflation data, the PCE. And if we think about what many economists are saying, they actually think these readings are going to come in higher than they did last month. And if that's the case, I mean, really all bets are off for a Fed pivot. Now, we've almost talked about the FOM, or the conclusion of the FOMC meeting and Fed Chair Jerome Powell's speech ad nauseum. But I think it's appropriate to review every now and then. And essentially, what Fed Chair Jerome Powell's getting at is there's no ifs, ands, or buts. It's almost like all bets are off. They're not pivoting, and they are going to, well, to use his words, bring down inflation at all costs, because from his perspective, whether we agree with him or not, what he is saying is we would rather sort of bite the bullet now to tame inflation so it doesn't get out of hand and get worse, and then we go into a stagflationary environment. Now, you don't have to agree with Fed Chair Jerome Powell. I think many people don't, but I think you need to live in reality and understand the environment we're in. So if you're trying to take on risk in this environment, what I mean by taking on risk is either going long or maybe buying property or whatever it is. I think you have to tread carefully here, because, and we're going to talk about this a little bit later in the live stream, but if you think about where the S&P 500 is trading at now in relation to forward PE, I think we're trading at about a 16.6 times forward earnings. Now, granted, I guess for a little bit of good news here, man, it's so beautiful here. A little bit of good news is that is below the 5-year and 10-year historical trend, or the historical average, okay? The bad news is forward projected earnings are just that. They are projected earnings. And over the past 2 weeks on the stream, we've been talking about how many analysts across the board at all the top investment banks have been revising down their earnings estimates for the next year, okay? So I think the vast majority of this drop in the stock market that we've had has been due to increased interest rates, right? Now, many of you are thinking, well, duh, I mean, that's obvious. We've been talking about that on the stream, but I think we have to take in something else into consideration. So I believe the vast majority of this drop in the equities market has been only due to repricing to account for higher interest rates. What I don't think has been priced into the market yet is earnings declines. I do not think the market has priced in yet earnings declines. And I think once the market starts to do that, and as we go into Q3 earnings season is starting very, very soon, and we'll cover it here on the channel, that's when I think things are gonna get a little bit dicey. But the good news is, over the long term, corporate profits in America generally tend to trend to the upside, with some hiccups along the way. Hey, UniJ22 says, greetings, Tom and chat. Good to see you. Maria's here. Good to see you, Maria. Linesing says, that's a big, bright wheel tonight. Yeah, so we are overlooking Bayside Marketplace. And this is the beautiful Ferris wheel here at Bayside Marketplace. We don't really usually come over here much on the streams, but it's kind of nice to walk through this park every now and then. Sally says, hey Tom, how are you doing tonight? I'm doing very good. Very good. Had a restful weekend, ready to hit it hard on Monday. Hopefully you guys are too. Dutchman is here. Cora Carpenter, welcome. Good to see you guys. Jay is here, says, hey Tom, good to see you, Jay. Dan Zhang says, Tom, South Korea. Says, Interpol just issued red notice for Do Kwon, the founder of, the Lunaterra thing. Yeah, so Dan, maybe you can provide some clarity on that. I haven't really been following it, just because you guys know my take on a lot of the alternative coins. I think a lot of the altcoins are just Ponzi schemes, to be blunt, right? I have to use the term allegedly so we don't get in any hot water here, but I think they had a warrant for his arrest for some time now, right? Hasn't it been like 2 or 3 weeks since the South Korean government has issued a warrant for his arrest? I could be mistaken, but I think that is the case. Really quick, so guys, I was screwing around with the stream settings today. Could you let me know if this is live in 1080p? Because I was trying to adjust some of the settings here, and I just want to make sure we're good. But if you look all the way in the distance, this is the Miami skyline that is right in front of the FTX arena. So if you look really closely, you could see the beautiful 1000 Museum, which is one of my favorite buildings in Miami. But this is Bayfront Park, so we have a really, really nice view. Dan Zhang says, I think so, but to be on the Interpol list is totally different level. Yikes. Yeah, I mean, look, I think a lot of these, I guess, founders of these crypto projects, I think a lot of this stuff is going to come to a head. And we've talked about this before on the streams, that the cryptocurrency environment lacks clarity in terms of a regulatory environment, right? There's very, very little regulatory clarity as it relates to cryptocurrencies. And the debate or consensus is essentially that a lot of these altcoins or these alternative coins should be classified as securities, right? So we've heard from Gary Gensler, which is at the helm of the SEC, now that this big Ethereum merger has gone from proof of work to proof of stake. Now Ethereum is even on the sort of watch list of the SEC. They're gonna have to try to make a decision on that. And I think we could debate that, right, back and forth till the cows come home. in relation to, are these alternative cryptocurrencies securities? Should they be classified as securities or not? The stance that I take is, number one, I don't know. In all transparency, if I had to take a stab at it, I would say yes. I would say the vast majority of these altcoins are securities, because if you think about it, it's just these founders are creating these tokens and distributing them to investors. And just because you call it a token and not a security doesn't mean it's not a security, right? It's sort of playing semantics. So until we have clarity, my thought process, I just want to stay out of it, right? Does that mean I may miss some life-changing investment gains? Sure, it does. And I'm okay with that. But, you know, what if I start buying all this stuff and, you know, really getting deep into the weeds with all this stuff, and then, oh, the SEC says, oh, all this stuff is securities. Well, now I'm either buying unlicensed securities, dealing them, and I just don't want to get involved in that. So that's sort of the stance that I take. And look, I don't think it's necessarily to the fault of all these people who are building these, I guess, crypto projects, you could say. I think it's the SEC's job to provide clarity. And I think they've been very derelict in their duties and just getting things done. So, hey, we have Sunshine NYC here. Good to see you, Sunshine. Dan Zhang says, Tom, the Dixie suddenly spiked to 114.5. I'll try to find out why for you. It is rare during the Asian session. Yeah, I mean, so Dan, to your point, I think you're going to continue to see a very, very strong dollar here. And I think we could be seeing some really, really rockin' movements in emerging markets specifically. Yeah, I think once we started the live stream, what was it? We've only been streaming for about like 3 minutes now. But once we started that live stream, I think I told you guys, oh, the Dixie's at 112 and now we're at 114. Those are huge moves in the currency markets. You know, we did talk about on the live stream how Japan had to intervene in their currency market to support the yen. So, really crazy stuff. Who else do we have? Hey, Learning is here. Welcome. Good to see you. Austin City Limits. Thank you for being here, Austin. Trust you're well. Roy S says, hey, Tom, mods and chat. Wishing you all well. Hey, Brad says, show us the SLS building. Yeah, so tonight... So right now we're in downtown Miami, I guess. Bayfront Park, walking now to the Bayside Marketplace. But we will make a loop around and we will go to Brickell. I just never really walked down here. Now you can see how close to the water we are. And I have a feeling with the 6 inches of rain that we're gonna get, probably this entire park will probably be submerged in water. But the really, I would say, the bad spot in terms of flooding that I've seen here in downtown Miami since I've been here is actually right outside of that 1000 Museum tower, right as you're merging on the highway there. It is always, even if we get like 2 or 3 inches of rain, like really, really soaking rain, that place pulls up like a swimming pool. It is nuts. Hey, Robert is here, says, hey, Tom and friends, good to see you, Robert. Photos from around New York says, Tom, did you pick up some supplies? I picked up some supplies, photos. I didn't really go to the extent that I thought I was gonna have to go to, because as I've been watching and monitoring the weather this weekend, a lot of the meteorologists, weathermen, have really been saying that the storm is gonna miss southern Florida, and that the majority of the storm is going to hit the panhandle, like Pensacola, Florida, and the like. So if anything, we probably won't get the hurricane force winds. What I think we're gonna get is just like crazy amount of soaking rain. So in the distance, that is the beautiful Paramount building. We'll actually be there in just a minute. This is Ricky's Arepas. Has anybody in the chat big fan of arepas? I don't even think I've ever had them. Crypto Nights is Tom, they exaggerated like a mofo. Yeah, I mean, the thing is, I'm just gonna prepare regardless because this will be my first, I guess, major hurricane, assuming that we actually do get it. So being from New York, I'm not really too experienced with dealing with all this stuff. So I think, I have probably maybe a week and a half supply of water. I have some canned goods and stuff like that. So I think I should be all right. To be quite honest, I think I'll be all right. Hey, DowJones.eth, what's up? This is Tom. Understanding the purpose of altcoins is key. Most protocols are scams. Some protocols launch governance tokens, and you vote based upon your holdings. Know your crypto, says DowJones.eth. Yeah, I think for me, Dow Jones is just. I think the SEC just needs to do a better job with giving us the thumbs up or thumbs down as to whether these are securities or not. So look, I don't go out there and I'm trying to figure out how to word this. Let's see if we see any dolphins too while we're at it. Now, when I say I think the vast majority of altcoins are scams, that may be pushing it, but the reason is, there's thousands of these crypto coins, right? So if you just have what a lot of people do is they just spin up these like junky ERC20 tokens and then market them and solicit them to people, and it's just really trying to extort money out of them. But there are some projects and protocols that are actually trying to do real things, which I get. But even those, it's sort of like, how can you build something when you don't know if the SEC will just flip a switch and say, oh yeah, this is a no-go, we can't be doing this. That's sort of where my head's at with that. So I think Gary Gensler is behind the 8 ball here, and I think he needs to take responsibility and ownership to just giving us some clarity, because at the end of the day, the United States of America, we want the United States to be by far the leader in all new technological advancements. Okay, we do not want, and I'm saying this selfishly because I'm an American, right? I think that's fair. Is that fair? I think it's fair. So I want the United States to be at the forefront of any and all innovation forever. And in order for us to really do that, you're going to need to create an environment where you can attract developers and things like that. And a big part of that is by having free and fair markets that are regulated by the SEC. But if we're sort of in limbo, then how could really any progress take place? That's sort of where my head's at. But it's a good point, Dow Jones. Harry Connor says dolphins will head for deep water. Hey, Manchu says, Tom, the SEC has been understaffed since the Enron days. Joan is here, says, beautiful, welcome, Joan. Michelle K is here, says, looks like such a nice evening in Miami. Yeah, it's a beautiful evening. Today was absolutely picture perfect day. So I guess you can consider it the calm before the storm. So everybody, Thursday, which is September 29th, we do have Nike reporting earnings, which I think should actually act as a pretty decent leading economic indicator. Because if Nike's earnings really tank here, which I don't think they will, but I'm actually not so much interested in Nike's earnings as I am interested in the forward guidance, right? Because what have we been talking about on the streams in relation to, oh wow, this looks really nice from here. We've been talking about on the streams in relation to the forward PE ratio on the S&P, right? So right now, we are trading at about a 16.6 forward PE on the S&P 500. That is well below the historical averages. So technically speaking, if you bought the market here, probably in 5 to 10 years, you would get a positive return because we are below trend or below average. However, the most important thing to think about is these are earnings estimates, right? Keyword estimate. And there's no guarantee that these estimates that are in place are going to stay there. You know, earnings could tank and fall off a cliff. S&P earnings could decline 30%, right? We could go into a massive recession, in which case, if Wall Street takes down these earnings estimates even more than they already have, well, what's to say that the actual forward PE ratio on the S&P isn't 20 right now? So I think we need to be cognizant of that. I think we need to be aware of that. And during Q3 earnings season, above all else, what I think we need to be paying attention to is that forward guidance. So more to come on that. But now we are entering the backside of Bayside Marketplace. I never knew this was Jimmy Buffett's Margaritaville here. This is interesting. It's like an indoor-outdoor type of seating area here. Estelle says, Tom, we lost our Ferris wheel here in my hometown. Estelle's joining us from Australia. Good to see you, Estelle. Thank you for joining. Trust you had a good weekend. Andy is here from Korea. Hey, Julia M is here. Says, hey Tom, so glad to be with you on a Sunday night. Thank you, Julia. Vinny Castellano's here. Good to see you, Vinny, from Staten Island, New York. Hey, Penelope is here as well. Brad says, hey Tom, just curious to know if you speak Spanish. Some say it's difficult to live in Miami if you do not speak Spanish. So I do not speak Spanish, but I think one of the good things about moving here is it'll probably force me to learn, which is sort of, I guess sort of a way for me to expand my knowledge inadvertently, so I'll be forced to, which I think is good. Now, granted, I could probably work my way around a conversation in Spanish. I don't think I would be extremely inept, but definitely not fluent at all. So we do have a key piece of housing data that I think is going to be absolutely critical to watch. And I think on Tuesday, what we're probably going to do, assuming we don't have any hurricane interruptions, is dedicate the entire stream to breaking down that housing data, okay? So on Tuesday, September 27th, S&P CoreLogic will release its Case-Shiller National Home Price Index for July. Now, the consensus call is for a 17% year-over-year jump compared with an 18% year-over-year jump in June. So we are seeing a little bit of deceleration here in home prices, but what we're still seeing is home prices are going up, even though the Federal Reserve is raising interest rates, but they're just going up at a slower and slower pace. However, what I'd be more interested in is looking at the month-over-month data, because as we talked about last week, as of now, we have about a quarter of all homes being sold finally selling for under their list price, all right? And this has happened for the first time in 12 months. So we can definitely see, without a shadow of a doubt, that increased interest rates are putting significant pressure here on the housing market. Now, to contextualize that for everybody, if we think about where rates were this time last year, interest rates were at 3%. Robert Wiley says, I'll try. Thank you so much. Appreciate it, Robert. Well, Robert, one thing I would say, and I saw your comments about global recession, I find it interesting that even though we got 2 negative consecutive quarters of GDP growth, every time you turn on CNBC, every time you turn on Bloomberg, and even when Fed Chair Jerome Powell was speaking, everybody's like, oh, we don't know if we're going to have a recession or not. We don't know if a recession is going to be a reality. We're already in one. I mean, just in my opinion, right? I think, we could argue it till we're blue in the face, but I think the argument has shifted more political in nature. Because essentially what people think is, oh, if you say that we're in a recession, you must not like Joe Biden. And if you say that we're not in a recession, you must love Joe Biden or the Biden administration, which I think is just sort of a very distorted way of looking at things and a very emotional way of looking at things. A recession doesn't necessarily mean there's Armageddon and everybody's going to die. It just means it's 2 consecutive quarters of negative GDP growth. That's it. So instead of clouding all of the financial media channels with debates about are we in a recession or not, we should just be talking about potential solutions to, oh, I think we have to go to the other way. I think this is totally closed off. I think we may have to walk around. Let's try to go out this way. Now, I understand that there are nuances, right? There's nuances where, well, Tom, how could we have a recession when the unemployment rate is, 3.5%, 3.2, 3.7%, right? And I get that and I understand that. But my whole argument is there's really no point in arguing about it, right? It doesn't really do us any good. Where I am more concerned is in the Eurozone, because the Eurozone has been experiencing extreme anemic growth and runaway inflation and extreme currency declines, as opposed to the United States, where we can weather sort of the storm a little bit better because obviously we have the US dollar, which is the world's reserve currency. And we have a very, very strong dollar right now, which is putting huge pressure on emerging markets. But I guess the overarching point is, wow, these are some of my favorite trees here. I'm not sure what these are called, but these sort of look like something out of a movie. Does anybody know what these are called? Hey, Robert Miller says, Tom, 30-year fixed rate mortgages are 6.6% as of Friday. Yeah, it seems like I can't even keep up with the pace that rates are rising. If you look at that 10-year U.S. Treasury yield, now these are not normal moves in the debt market, by the way. These are very, very erratic moves in the bond market. What you want, now the markets generally can handle yields that are going up. It's more so the pace that yields are going up, right? Because if you have an uncontrolled sell-off in the debt market, right, when people are dumping bonds, right, as bond prices have an inverse correlation with yields, that's really the problem. And that's really what we've been seeing. So the debt market is extremely unstable. It seems like every time we do the live stream, we're like, a 30-year fixed rate mortgage is 6%. Oh, now 6.25, now 6.6. I think in some nuanced situations, depending on a person's credit score, depending on your income level and your credit worthiness, some people are probably already being quoted 7% 30-year fixed rate mortgages. Some people are probably already being quoted that. Oh, Sweet Country Living in Michigan says, Tom, take a picture of the tree and then you could look up what it is. Maybe I'll do that tomorrow. But yeah, it almost looks like those, I'm not sure if it's a weeping willow tree. I don't want to jump too soon. Oh, 61 says they are called ficus trees. Copy that. Julia M says, Tom, one of my 20-something coworkers says He is part of the oh man, that's horrible. I will never own my own home generation. So sad. Yeah, I mean, it is sad, and it's quite depressing. But so let's go with what Julia is saying here, because I think Julia M brings up a very good point. A very, very good point. And here's been sort of my argument from the beginning. And I think it's appropriate to present it again, just because, you know, I think it's good to hear from both sides of the story. Now, what you're going to hear a lot of the pundits and big money managers on Wall Street, and even some academics, they're going to be coming on CNBC, Bloomberg, and saying Fed Chair Jerome Powell is asleep at the wheel. He doesn't know what he's talking about, and he's an idiot, and he's out to crash the economy. That is the consensus. It's already starting to happen. And again, I tend to be more libertarian in nature, more conservative. So I'm actually a part of the, end the Fed crowd. But at the end of the day, you can't just scapegoat one entity. All right, not everything is the Fed's fault. All right, we do have a fiscal side of the house in terms of policy as well. So I think people are very forgetful of that. So my theory has been, look, ever since the lows of the 2008 financial crisis, we have been in an artificially suppressed interest rate environment. Okay, the Fed has cut interest rates and held them near zero for almost a decade. And the reason why they were able to do that is because inflation really wasn't ramping. Now, there's also an argument to say that inflation has always been ramping, but it just hasn't showed up in the CPI due to calculations, and I get that argument. But the reason why it's different this time, and I know the famous last words on Wall Street is it's never different this time, but here's the reason why it's different this time. The Fed is forced to raise interest rates because we have blow-off inflation in the United States now, because we printed all this money, supply chains are messed up. So in order to kill that inflation, the Fed's got to raise rates. They got to do something. If they don't do something and they keep rates artificially suppressed, will the stock market probably continue to go up, and will corporate earnings continue to probably do good? Yeah, but you're going to crush the people in the middle class and the lower class, right? Think about it like this. If you're a banker working on Wall Street, you're making 2 bills, 3 bills, could you survive 9.5% inflation annually? Sure. Is it going to be a little inconvenient? Yeah, possibly a little bit inconvenient. But chances are you probably own a lot of equities, and you probably own a home, right? That's being appreciated due to all this inflation. Now, I think when people talk about inflation in general, what they generally think of is prices just going up of food, energy, housing. But you also have to take into consideration asset price inflation too. Right? If you just look at a monthly view of the S&P 500, the NASDAQ, the Dow Jones Industrial Average, it's literally been like a hockey stick chart up and to the right since the lows of 2008. So taking that into consideration, look at the big macro picture. Who owns the majority of assets in the United States? It's not the person working a regular 9-to-5 that's just trying to, scrape by to support a family. It's the top 10% of Americans. So easy monetary policy creates an environment of a perpetual wealth divide, okay? And that's why you're seeing a perpetual wealth gap expanding. So what Fed Chair Jerome Powell said at the conclusion of the FOMC meeting, it's like, look, housing is going to have to go through a correction. The equities market is going to have to go through a correction, because if we don't do that, the people who are really, really suffering from inflation are the people that are living on fixed incomes, right? Maybe they make less than $100,000 a year in terms of their household income. Those people cannot, not negotiable, cannot afford 9.5% inflation a year. It would bankrupt these people. So again, that has sort of been the argument to say we need to increase interest rates. Now, the other side of the argument is, okay, if you raise rates and you want to start quantitative tightening and let the Fed balance sheet contract, well, unemployment's going to go up. Yeah, you're right. I understand what happened under Paul Volcker, right? In 1980, Paul Volcker was tapped on the shoulder to say, oh, this is the FTX arena, by the way. We'll actually walk up there. We haven't been here in a while. But Paul Volcker was tapped on the shoulder to say, look, we're dealing with unprecedented inflation and a stagnating economy, also known as stagflation. So what Paul Volcker had to do is breathe fire and raise rates to 20%, all while the unemployment rate spiked to over 10%. But again, it's one of those things that's short-term pain for long-term gain. Now, I criticize the Federal Reserve all the time, but I do not think it's appropriate just to say, oh, the Fed is going to crash the economy, the Fed's horrible. Because it's not, you got to think about the people who are really getting killed by this inflation, right? Let's say if you have a $400 monthly grocery budget and you're living on a fixed income. With inflation, your $400 grocery budget now, with the $400 you spent, only gets you $300 worth of food. Okay, that's a big problem. Now, I'll stop rambling, but one of the other things that would be on the other side of the argument would be like, well, Tom, but you have to take into consideration what has caused this inflation in the first place, which has been COVID-19 wreaking havoc on the supply chains. So once these supply chains heal themselves, inflation will come down, and we're already starting to see that. Yes, I understand that, and I understand that monetary policy has a lag. But rates have been artificially suppressed for too long, and savers have been getting robbed for too long. So I think we need to go back to an environment where interest rates normalize. That's sort of my opinion on it. Sorry about that, everybody, but that's just sort of my position. But check out how beautiful, gorgeous, fantastic, however you want to describe it. This is the Miami Skyline right outside of the FTX Arena on a beautiful, clear night. Now, this building right here is actually the very famous 1000 Museum building right here. It's one of my favorite buildings in all of Miami. And this one, the very colorful one, is the Paramount building in Miami. However, you guys know, if you've been watching Walks on Wall Street long enough, my absolute favorite building, second to the Seagram building in New York City, is this one. And this is the Miami Freedom Tower. And this has so much rich history here because this is where the Cuban immigrants first landed in the United States. It was a very, very big symbol of free markets, freedom in general. And I love it. And I think it stands out rather nicely because it's a lot more of the older architecture amongst all of the sort of wonky and kind of crazy new style buildings, these modern buildings with, swimming pools and roof decks. I think it's really amazing just to sort of see the contrast of just how far the city of Miami has come. And I think it means a lot. This building is fantastic. Maybe I'll do a little bit of a walking tour one day of inside the building if I could ever get off of work, but I've never been in. I really want to go in. So hey, Gregory is here. What's up, Gregory? Hey, NMB 045's Tom. The world recession conjures images of 2008, 2009, which the wrong way to think of the present recession, says NMB 045. Marjan says you are correct, but the correction would be, says Marjan. Yeah, I think at the end of the day, if we just sort of keep it in simplistic terms, if you looked at the correlation, and I think this was, to give credit, I think Tom Lee. So Tom Lee is the CEO and founder of Fundstrat based in New York City. I think he's a great analyst. And there's about a 92 or a 93% correlation with the expansion of the Federal Reserve's balance sheet and equity prices. So being that as the Fed continues to buy mortgage-backed securities and US Treasuries, equities over time has gone up, right? So now we are in a tightening cycle. Many people think the only tool the Federal Reserve has is just to raise rates. That's not necessarily true. They have a balance sheet that they can unwind. So what the Fed is doing right now is letting assets roll off the balance sheet, right? And not buying any new mortgage-backed securities or US Treasuries. And I would like to say one other thing. This isn't only the Federal Reserve. I mean, you need to zoom out and look at the macro picture. This is central banks all over the world here that are starting to tighten their monetary policies, with 2 exceptions. So the BOJ, the Bank of Japan, is actually continuing with quantitative easing. And I believe the central bank in Turkey is also cutting rates. But at the end of the day, the Turkish lira, I believe, just made a new all-time record low. So those are 2, that's just a horror show. But hey, Raven Poe says, any ideas, thoughts? I do not. Raven Poe, I have no idea. So here's what I think we should do, everybody, and let me know what you guys think. Let's cross the street and let's get on the Metro Mover and take it to Brickell, because I don't think we've been on the Metro Mover during stream in maybe about a month. I think it's been about a month. So I'll give you one last look of the FTX arena here. Billy says, with all due respect, I don't listen to Tom Lee. He has been wrong all year, which is fine, but never admits to it, and pulls another theory on why he won't be wrong. Yeah, I mean, I definitely respect that opinion, Billy, for sure. And many people will say, oh, well, look where Tom Lee's projections for the S&P 500 were in 2007, right before the crisis. And I guess the only thing I'd like to say about that is, to be fair, it doesn't, and I think this is actually good to talk about, because one of my friends that's a very, very successful hedge fund manager, he said something which was very eye-opening to me. He says, even the experts that everybody idolizes, just because they say something doesn't mean they're right. Everybody on Wall Street is making their own predictions based upon their own cognitive biases. And emotions are sort of very hard to, it's very hard to detach your own personal emotions. Sorry, anytime I hear random shrieking, I always just like to give a quick check around, just to make sure nothing's going on. And look, even if you're a big notable analyst on Wall Street and you're constantly listed on CNBC, it doesn't mean you're always going to be right 100% of the time. The best traders and the best investors on Wall Street, the best ones, are only really right about 40% of the time, and that's if like you're really, really shooting lights out. But I guess your criticism, Billy, maybe you said that Tom Lee doesn't own up to being wrong. I mean, maybe not. I don't know. I sort of never really viewed it that way. But anybody who's really willing to put their neck out on the line in public to publish their work and give a thesis, I think that's pretty admirable, because it's not easy to go on CNBC and make a big claim in front of the world, and then when you're wrong, everybody throws stones and says, "Oh, you're an idiot. This guy is you should never listen to him." It's just not how the market works. People could put out compelling bull and bear theses, and to Stanley Druckenmiller's point, this is what Druckenmiller said in a brand new interview, which I'm actually going to share with you guys tomorrow. So stay tuned for that. You are not going to want to miss this. Tomorrow is probably going to be the biggest live stream of the year, assuming we don't get rained out. But Stan Druckenmiller had another interview, brand new interview. And I know I've been peppering you with these Stan Druckenmiller interviews, but he said something so compelling and eye-opening in this interview. And he said, look, oftentimes I tell people, don't listen to Stan Druckenmiller. And this is what Stan Druckenmiller is saying. He said this in the interview. He's like, oftentimes I tell people, don't listen to me, because I could be so bullish on an idea on Monday and then pivot and change my whole thesis and be short on Tuesday and have 100% of the account short. And it's so true, because things change. Ooh, I think we're missing the bus or the Metro Mover. Hold on. Oh, that's the wrong way. We got to get the other way. We got to get the Park West loop. Let's see. I haven't taken this in a while. Yeah, I think we got to get this side. All right, we'll wait. Oh, Gene says, Tom, this train does not go to Brickell. You will need to transfer. Yeah, I think we need to take this and then transfer at, what, the government center, I think? Yeah, so we got to go this. I think we'll figure it out. I'll figure it out. But I remember we got on this one last time. We didn't. Jean Paul, do you know what stop that we have to transfer at? I'm a New Yorker at heart. I'm not. Hey, Sean says Kathy Wood publishes her work and she's bullish on innovation, tech, and AI. This day and age, how can we not be bullish on these sectors? So, Sean, I actually wrote a piece, and if you guys want to read that piece, if you scan the QR code on your screen, I write a free investing newsletter, usually every other Tuesday after the market closes. And one of the things I said about Kathy Wood is she may very well be right in her thesis over the long term, but you cannot afford to take an 80 to 90% drawdown in your capital. You have to manage risk, okay? Kathy Wood has been buying these names like Zoom, has been buying these names like Twilio, even though they're well below their 200-day moving average and 50-day moving average with declining earnings. You can't manage risk like that. You cannot afford to do that. So look, I think she's really smart, but I think we totally differ on risk managing. And I wrote a piece about this in the Behind the Street newsletter to say, look, this ARK Innovation ETF is going through so much irrational exuberance that there was actually an article published in Bloomberg Korea where they were comparing Kathy Wood to a money tree. And they said, oh, Kathy Wood is the new money tree. And I remember when that article came out, I then wrote in the Behind the Street newsletter, I'm like, this is the top. This ETF is going to get absolutely hammered, okay? And sort of to piggyback off of what we were talking about in relation to the Fed, the Federal Reserve's easy monetary policies has created all of this irrational exuberance and all this nonsense with the meme stocks, with a lot of these altcoins and crypto, and a lot of these very unprofitable tech companies that were only focused on high revenue growth, right? They weren't focused on profitability. I think the Metro Mover's coming in a minute. So to my point about Kathy Wood, could she be right over the long term? Yeah, maybe. But that is no way to invest. You cannot afford to take 80% drawdowns. That is just, I mean, that's just not how you do it. All right, so we are going to get on the Metro Mover here, but then we have to transfer. So bear with me. I haven't taken the train. I'm not too familiar, so just bear with me. But if you guys are enjoying the live stream so far, feel free to leave a like on the video and hit the subscribe button if you're new. We usually do these live streams about 5 days a week between New York City and Miami. War Walker says this is the wrong train. Well, could we take it around? We'll take it for a lap, I guess. All right, so we're going to 11th Street Station. Hey, Rich is here. What's up, Rich? for any of you Miami people in the chat, am I on the wrong train? This is what the inside of the train looks like. Definitely different than New York. As you notice, there's only one very small seating area, so different from New York City subway. John says, yes, we are on the wrong train. So if I stay on this, could I transfer somewhere though?
This is 11th Street Station. Please stand clear of the doors and hold the handrails.
If we're on the wrong train, we'll just get off at the next stop.
The next stop is Museum Park Station.
So this should be the Frost Science Museum, I think. This is the very famous Frost Science Museum.
You're not scared? Show you my butt. What do you think?
Lay the... You know, the park to the right is actually very, very nice. Zozo Bombs, I believe there's one more station, then it goes back. All right, we'll take the loop. I never really take the Metro mover, so. Ryan Royal, so true. Ryan says the Metro mover seems way faster when you're actually on it. It does. I think you're right.
The next stop is Adrian R. Station.
Dark now. Dark to even see. Oh, this is the Omni. So this is actually where I get off the bus sometimes. So I actually get off the bus here sometimes.
Please hold on. The train is approaching. Adrian R. Center Station.
Oh, Adrian. Got one more. I thought I'd been here.
Why? I'm gonna fucking kill you. Can we get off here?
Yeah, no, it's next
Babe, you lying.
next one. I thought
Come
I'd been
sit.
here for one.
Come
Yeah,
sit.
sit.
I want to see where you're at. You sit.
Hey, Nirvana fan 5000. Good to see you. Yeah, somebody said the takeoff might take a while.
One more. First one is Adrian, 10 turns, and the next one is ours. And then,
Are you sure?
yeah, I've got it. Here, sit over here.
So this is what the inside of the Metro Mover looks like. Oh, Warwalker says we have to get off here. Alright, Warwalker, I'm trusting you, man. I'm trusting Warwalker. He's from Miami. So Warwalker, if I want to get to Brickell, you're telling me I get off here, right? Wow, this is a nice view. So this is the view of the Paramount building. So this is where I actually get the bus sometimes. Yeah, this is He Will Not Lead You Wrong. Yeah, I'm putting my confidence in War Walker. If you look all the way in the distance, you will see the Ferris wheel here. Hey, Rob H says, which station you at? So this is the Omni. So I believe this is one of the biggest bus terminals here. And sometimes if I'm getting a little bit too tired of the bus, I'll just get off the bus here and walk all the way to downtown. Jay Bless says, Tom, how much is the bus fare? I think it's $225. I think the bus is $225, I believe. Now, some parts of Miami, like North Beach and the like, you could actually take the trolley for free, which is good. Stony says it's pouring out here in Brooklyn. So once again, everybody, I just do want to reiterate, on Tuesday, S&P CoreLogic releases its Case-Shiller National Home Price Index for July. Consensus is that we're going to have a 17% year-over-year jump in housing prices, which is pretty significant, but it is a deceleration from the 18% we saw in June. This past week, Fed Chair Jerome Powell did say that housing needs to go through a quote-unquote correction. And I think that's pretty apparent now that the average 30-year fixed-rate mortgage is right around 6.6%, probably going higher. But one of the things that was interesting, and I'm not sure if you guys are following me on Twitter, but if you follow @WalksWallStreet on Twitter, not only do I post a lot of my equity research on there, interesting charts, but I retweeted a very interesting article from the Wall Street Journal that was talking about that now that we've been in this environment of artificially suppressed rates for quite some time, who in their right mind would ever sell their home that they locked in a 3% interest rate to sell their house to go back out into the market to then pay, upwards of 7%. And that could be one of the reasons why we don't have a huge amount of supply on the market right now, or coming on the market. So if you want to read that article, I think it was the last thing that I retweeted on Twitter. You can follow @WalksWallStreet. Hey, Kelly is here. It says, hey, my husband and I like watching your videos. First time commenting. Came to hey, keep up the great work. Thank you, Kelly. Appreciate it.
The train to downtown is arriving. Stand
War
back
Walker.
from the platform edge.
War Walker
Allow
is
passengers
a
to exit the
gem.
vehicle before boarding.
So we're gonna get on this one and go to downtown, and I think we got to transfer at Brickell. So we'll see how this goes. Oh, Government Center, Rob H. Thank you for that. All right, so we'll take this to the Government Center. Uh, 61 says take this one and get off at College North. Transfer to the Brickell Loop or Government Center. Okay.
This is Adrian Arch Center Station. Please stand clear of the doors and hold the handrails. This train will
War
be run
Walkers is Tom at the Government Center. Get off and transfer to the Brickell Loop.
The next stop is
Will do.
Museum Park Station.
Gene says College North Station is easier. Well, we'll see whichever one comes first, I guess. Melissa White, thank you so much for joining. Zozo Bob. It says the government center is the main transfer station.
Please hold on. The train is approaching. Museum Park Station.
Nirvana fans, is Miami more convenient to live in New York City? I don't know if I'd say that. I think public transportation is a little bit better in New York, but I haven't really had a problem with it. Laura Walker says Tom loves his white t-shirts. I do, especially when we're streaming. G-Shep, thank you. Hey, thank you so much for the 25 SAR. Appreciate it. Thank you for the support.
Please stand clear of the doors and hold the handrails.
Ryan Royal says, Tom, what a great way to get around the city. Is this completely free? Yeah, so the Metro Mover is free, but the bus is, I think it's $2.25. But thank you all of our good friends from Saudi Arabia. Appreciate it. Been on this stop. Hey, Phillies. What's up, Tom? It's pouring in New York City right now. Damn, yeah, it's gonna pour here too in Miami with the hurricane. Gene Paul says all these vacant lots will be built up soon. Yeah, I think, what is it? The Miami World Tower, I think, is gonna be here. Looks like we have a delay on the train. Teresa Diaz, thank you so much. Ooh, it's already 10 p.m. Penelope says, Tom, what's the tune you were whistling? I don't know. I don't think that was me. It may have been somebody else whistling. But if I am whistling, it's usually like Frank Sinatra or something like that. Wow, Dan Zhang says, Tom, I'm actually thinking about moving to New Jersey. I was in Fort Lee and Edgewater for the whole day, and the neighborhood is just so nice. And less crowded and cheaper than New York. Yeah, I think that's a good idea.
Please stand clear of the doors and hold the handrails. This train will depart momentarily.
I think we're departing now.
The next stop is Park West Station.
I wonder how many stops. favorite part of New Jersey
Please hold on.
is
The
Jersey
train is
City.
approaching. Park West Station.
Hey Mac 65, thank you so much for the support.
This is Park West Station. Please stand clear of the doors and hold the handrails. This train will depart momentarily.
Okay, War Walker says we got 3 more stops.
The next stop is College North Station. Transfer here for
Hey, Boston Mass Dave. Welcome to the Metro Mover. Once you get to College North Station, you are on a loop with Brickell trains. You can swap anywhere. Okay, we're gonna do that. Thank you all so much.
Please hold on.
Hey,
The train is
Pixel Logic.
approaching.
Thank you.
College North Station. Transfer here for Inner Loop.
All right, team, we're gonna get off here. So we're getting off here, right? Oh, this is where the bull is. So the Miami Bull, as it relates to the Wall Street Bull. Let's see if we can see it from here. So if you look right here, this is where the... Oh, War Walkers just wait till the government center. Oh well, we got off here. But right there is the mighty bull. There's probably going to be something big built in this vacant lot too. This sign says all new apartments for rent here, so. Hey, Jay, bless us here. Says love your channel. Thank you, Jay. Appreciate it.
An interloop train is arriving. Stand back from the platform edge. Allow passengers to exit the vehicle before boarding.
All right, so should I get on this inner loop one? So is this what I'm getting on? No, right? No, I got to get on this side. Yeah. This one. Copy that. War Walker says yes. Somebody says nope. Not the inner loop. Somebody says, okay, I'll stay on the Omni loop. Wow. Zozo Bob says the tower here is going to be 900 feet tall. I see what you mean. So we're here. We got to go all the way here. So we'll go this way and then here. Might as well have a seat. But right in front of you, you can see the beautiful City National Bank building. So speaking about all these office buildings, here's an interesting statistic today out of Barron's. It says 47.5% is the estimated office occupancy in 10 U.S. metro markets from September 8th to September 14th, the highest percentage since late March 2020. So that's still a little bit low, but I think as now Labor Day is come and gone, I think many organizations and businesses in the United States are starting to bring their employees back to the office. But still, that's relatively low. Relatively low. Now, I do notice as we do the live streams around New York City, it seems as if there's a lot more people there now, especially as college is back in session and the like, but still pretty low occupancy rates, not gonna lie. This big tower right here, I'll try to zoom in on it, is the brand new Aston Martin building, which is fantastic. Not yet complete. SoCal says go to the University of Miami. Maybe. Man, I think we got quite the long time. I think we could have... Next train, Brickell Loop. Okay, we're gonna get on that one. Later, we were originally on the Omni Loop.
An interloop train is arriving. Stand back from
Another
the platform
interloop?
edge. Allow passengers to exit the vehicle before boarding.
Está llegando un tren de interloop. No tienen que alejarlo del borde de la plataforma.
And this is the Paramount Tower here. Here's the Interloop again. Seems like tons of Interloop trains as opposed to Brickell Loop. I believe in each car there's only 2 seats. This is Jewish Community Services of South Florida. Oh, speaking of that, I think tomorrow is Rosh Hashanah, I believe. So happy Rosh Hashanah to everybody who celebrates. I think it's tomorrow, on Monday, right? Nirvana fan. Gene Paul says wait for Brickell Loop. It says 6 minutes. We'll see.
A Brickell Loop train is arriving.
Ah,
Stand
finally.
back from the platform
Thank God.
edge. Allow passengers to exit the vehicle before boarding.
Está llegando un tren de interloop. No tienen que alejarlo.
Wow, look at these bike lanes. These are all brand new, I think.
Permite a los pasajeros salir del tren antes de abordar.
Ah, thank God. We get on this one, right?
College North Station.
Cynthia Beal, welcome. Yeah, I think we'll take this one. Hey, Herbert Daughtry, says Tom.
Rookie to Ferguson Junior Station.
Oh, tonight through Tuesday. Okay, nice. So we're gonna take this maybe 4 stops. Maybe we'll get off over once we go over the water, I guess.
Ferguson Junior Station. Exit here for Bright Line.
Ah, the Bright Line. I've never taken the Bright Line. Anybody ever taken Bright Line? Nirvana Fan 500.
Looking to Ferguson Junior Station. Exit here for Bright Line.
Herbert's is Tom. Rosh Hashanah is tonight through Tuesday. Very nice.
Please stand clear of the doors and hold the handrail.
Wishing
This
you
train will
peace
depart
for all of those who
momentarily.
celebrate.
The next stop is Government Center Station. Transfer here for.
Ooh, Layla, she's
Metro
telling me you
Rail.
love the Bright Line. They will drop you at your stop in a yellow Tesla. Nice. We'll have to check it out. Oh, Deese's AK is taking it? I gotta go back and look at his video of it. Zozo Bob says the Bright Line will also be able to connect to Orlando. That's good.
Government Center Station. Transfer here for.
TFC,
Metro Rail.
that's hilarious, TFC. My God, dude. Oh my God. TFC, don't. All right, let's try to migrate to the other side
This is
because we got a lot of people coming
Government
on.
Center Station. Transfer here for.
Deep Value Alex is where do you see mortgage rates going? Yeah, I wouldn't be surprised if we saw a 10% 30-year fixed. Wouldn't be surprised at all.
Please stand clear of the doors and hold the handrails. This train will depart momentarily.
I mean, at this point, at this rate, I guess you could say. Right now, we're all.
Stop it.
I think the average right now is 6.6%, maybe a little less. And that's just the average. So that means depending on your credit risk, depending on your credit, some people could already be quoted, 7% 30-year fixed. It's possible. Esteban dos Santos, good to see you from Brazil. FedEx.
Please hold on. The train is approaching. 3rd Street Station.
Lizzie Hatch. Yeah, Barry says in 1981 mortgage rates. Yeah, we could be going back to a Paul Volcker style environment. Very possible.
Please hold on. The train is approaching. Riverwalk Station.
You were quoted 6.2% for your purchase. Very nice. TFC says I was looking for a house in New Jersey this past summer, but was outbid on many properties.
This is Riverwalk Station.
Hey, Brevard County Real
Please
Estate.
stand
Good to see
clear of the
you.
doors and hold the handrails. This train will depart momentarily.
So I think we're gonna do 2 more stops.
The next stop is 5th Street Station.
Oh, it was for a new build. It says the Ellery 1. Thank you for sharing that. I want to follow up on that in a minute once we get off the train.
Please hold on. The train is approaching 5th Street Station. This is 5th Street Station.
Oh, Lizzie Hatch said we should close on the place on 9:30. Well, congrats. It's awesome.
Please stand clear of the doors and hold the handrails. This train will depart momentarily. The next stop is Brickell City Center Station.
We'll get
8th
off
Street.
here. Hey, Mike Skate TV, what's up?
Please hold on. The train is approaching Brickell City Center Station, 8th Street.
Ellery says to buy down 5.2%. It was over 20K. Okay, so they were. Yeah, I'm gonna follow up with you on that in a minute. Just let me get off here. So they quoted you points. What was the purchase price on that, if you don't mind disclosing? Yeah, Brevard County Real Estate is guaranteed you're paying points. Yeah, that's what I thought too. So Brevard County Real Estate, we were talking about this Wall Street Journal article I came across. And I wanted to know your take on this because you've been in real estate probably longer than anybody here. Let me orient myself. I don't know where I am. Oh yeah, we're right here. And oh, it drops you off in the heart of sort of Mary Brickell Village. Nice. Well, thank you everybody for helping me navigate. So Brevard County Real Estate, I want your take on this. I'm curious what you think. So let me cross here. So a Wall Street Journal article essentially said right now we have about, or in August, there was about 1.3 million homes on the market for sale. Now, in 2006, in August of 2006, there was about 3.5 homes on the market for sale. So one of the questions was, why aren't we seeing a big explosion in inventory? And one of the things that the article outlined was that since we've been in this environment of artificially suppressed rates, why on earth would anybody sell their property now if they have a 3% interest rate, a 4% interest rate, to just go back into the market to maybe buy another home at 6 to 7%? So what is your take on that? I think it's a pretty decent thesis because inventory is still pretty low. I mean, the only reason why I think somebody would sell their existing home now is obviously if they got another job and they have to, commute somewhere else. But then again, what I would do if I was forced to move somewhere else and have a 3% rate or sometimes even lower than 3% rate on my mortgage, why wouldn't I just rent out my property? Right? Why wouldn't I just say, okay, I'll have tenants pay down my cheap debt or let inflation erode it away and then maybe go rent somewhere else? So that is one of the, I guess, one of the potential theses here as to why we're not seeing like an explosion of inventory on the market. But I'd like to know your thoughts on that. The Ellery ones, sorry, it's $722,000. And let me know if I'm pronouncing your name wrong, by the way. If I am, I'm not doing it intentionally. Let me know what. And what is it? Is this single family? Is this duplex, triplex? And what market, by the way? Curious. So this is South 8th Street here. And we are standing right under the KPMG building, which also WeWork has offices here. Sam Morganos is Lucid Motors. Yeah, this is one of the Lucid showrooms here. Oh, Brightline Tesla taxi. Very cool. We'll wait for the light and then we'll continue to walk. These lights here in Brickell are 5 to 10 minute lights, just like Long Island. Hey, Brevard County real estate, says Tom, I agree, but most cases are unique. Job loss, divorce, downsizing. Most people staying put because rent is as much or less. Copy that. That's a good point. Yeah, I mean, because historically, generally speaking, right, as interest rates go up, home affordability goes down because debt is more expensive, right? Rates, we've had 100% move in rates, but the article made a good point. It's like, because the housing market's really weird because 2008 was so bad. I think everybody is like so scarred from 2008 that the moment we have any sort of movement in the debt market, any sort of price declines, everybody automatically says it's going to be 2008 and worse, and it's going to be Armageddon. Now, I don't think it's going to be like that. There was another article we talked about yesterday on the live stream that has to do with the historical data for housing declines on a regional basis and a national basis. And according to Case Schiller, there's only been one. Hey, good to see you. Thanks, man. No, it's okay. There's only been one time in the past. Since the Great Depression, there's only been one time that home prices on a national level declined materially, only once. Now, on a regional level, there's been many, many times. And we sort of talked about very specific pockets of the housing market in Phoenix, in Miami, Florida, Tampa, Florida, that whenever you have these irrational pushes, sort of like we saw during COVID, big flights out of the city. You saw the Boise, Idaho market getting bid up. You saw the Tampa, Florida market getting bid up, Miami, Florida market getting bid up. I think those specific markets that really took off and had 30% year over year price increases, I think you'll see declines in those specific markets. But nationally, I think maybe we'll see a teeny bit of a decline or just a tapering off. But in those markets like Denver, Colorado, Miami, Florida, Tampa, Florida, Houston, Texas, Austin, where prices have just gone upward like crazy, I think you'll see price declines there of maybe 15 to 20%. Hey, Roy is here. What's up, Roy? Good to see you, my friend. So Roy is joining us from San Francisco, California. Welcome. Brevard County says, like politics, real estate is local. Love that. So supposedly here in Marybrickle Village, they're gonna tear down all of these very low-rise buildings and build these massive super talls. This would be a very, very good example of one of those very specific niche real estate markets that have gone gangbusters. Here in Brickell, the rents and these co-op condominiums, whatever you want to call them, the prices have just gone ridiculous. And I think you're going to see material price declines there. And another analogy I'd like to give, because I favorite every single family home in the Miami area, the Long Island, New York area, that's in my price range, just to sort of keep tabs on the market. And what you're seeing are these ridiculous, what I like to call wish pricing, where you'll have a basic 3-bedroom, 2-bathroom home, and they're asking $600,000 to $650,000 for a 3-bedroom, 2-bathroom home. Now that's just not a real price, in my opinion. It was never a real price. Nobody was going to pay for that. But when those prices come down to, 450 to 500, it's going to be all over the front page of the Wall Street Journal. Big housing crash, 30% declines, 40% declines, when in actuality, those prices weren't even real anyway. I mean, those are just wishful thinking, ridiculous prices. Hey, Joe says you were making a video a couple nights ago in front of Lucid. Yeah, we were. Lucid Motors, one of those EV companies. Rivian also. Hey, Brevard County Real Estate says, hey Tom, I was just in California, nice seaside town. Prices are super high for the age and conditions of the homes there. I asked the long-term local why. He said tech money. I could imagine. Yeah, a lot of those tech bros from Silicon Valley are coming in, buying, overpaying for real estate because they can. Interesting. So this building says SLS 2. There must be like 10 to 20 SLS buildings. There's one here, there's 2 over here, which we just passed. Interesting. Hey, Monique is here. This is also some are selling and moving in with family, caregivers, COVID/job losses. Monique, that's a good point. That's a good point. Brevard County Real Estate says, so the quote-unquote regular people can't compete and are getting pushed out. Well, that's what's happening here in Miami too, I believe. I was reading an article in the Miami Herald where a lot of native Miamians, is that what they go by? Miamians? I think that's right. Anyway, a lot of native people who were born and raised in Miami that are at the age now of the prime home buying age, let's say late 20s, early 30s, they're getting priced out of the market by people from the Northeast that are coming down and buying homes. And one of the major drawdowns in the article was saying that if you look at the patterns of the people who are buying homes here, driving up the price, oftentimes they're only staying in those homes for maybe 50 to 70% of the year, and then they're living elsewhere, right? And then using them for short-term rentals on like a Vrbo or Airbnb. So I would be very, very cognizant and aware that if you're an investor looking to invest in the Miami area and just to Airbnb it or do short-term rentals, I think you're going to see a ton of pressure from the state and the local governments to do away and put really, really harsh regulations on Airbnbs. So if that's your only investment thesis, to buy in Miami, to use it as short-term rental, I would think twice about it, because there's going to be a very, very big stir at the government level, maybe even outlawing it altogether. So, I mean, maybe that's a bit of a stretch statement there, but you really just got to pay attention. If you're going to do Airbnb, you really, really have to check with your local municipality to see if it's allowed. Hey, Ricardo 305 says, what about the dollar index? Already jumped near 114. Yeah, that's insanity. When we started the stream from the 200 Southeast Financial Center, I think the Dixie was at 113, so it's already at 114. So that probably leads me to believe that futures are probably negative. If we could get a quick check of futures. Because usually, now not all the time, but usually dollar up, 10-year US Treasury yield up, bond yields up across the board. Usually equities are lower. Which also has me to believe emerging markets are probably going to get slaughtered next week too. Hey, Lee is here. Says the state of Florida will eventually claim domain over Airbnb. Too much money at stake. Yeah, I mean, you guys know I do short-term rental at my place, but I do the individual rooms. And what I think I'm going to do, and let me just tell you, the demand is ridiculous, like ridiculous demand. But here's what I think I may do, just so it's not too much of a revolving door. Here's what I may do. What I may do is list the property on Airbnb, but only for longer term tenants of maybe 3 months or more. And what I'm trying to do is cater to a specific crowd that either works in tech or finance, that their companies will allow them maybe a month or 2 months to potentially 3 months out of the year to work wherever they want. So a lot of my buddies that are at Salesforce, for example, let's just take Salesforce for example, ticker symbol CRM. One of my friends is a strategic account executive at Salesforce. What Salesforce is telling him is they can work wherever they want for 3 months out of the year, and during that time you really don't have to come into the office. But aside from Salesforce, there's many other businesses that are saying, okay, you can work from wherever you want or whichever corporate office you want in the United States, or even globally, for 2 months out of the year. And those are the type of clientele that I'm trying to attract. So I may do that. Hey, the Ellery one says, Tom, my friend does that for travel nurse now. Her Airbnb is always booked. Oh my gosh, you know, that's so funny you mentioned that. We had a traveling nurse here in the chat one time talking about that. Now, number one, traveling nurses make freaking bank. They make a ton of money, and rightfully so. I mean, they do God's work. But you know what? That could be a specific vertical too. Target those particular people, you know, traveling nurse. Interesting. I think I'm gonna look into that, because what I've been doing is renting out. So my place is 3 bedrooms technically, right? 3 core bedrooms, and then 1 very big Florida room with 2 bathrooms and a separate entrance. So the demand has been really high, like extremely high. If you open up any of the dates for Airbnb, it's like a tidal wave of people booking. So in order to cut back on the just people staying for like 5 days a week, and then I have to, you know, pay someone to clean it, like a cleaning service, I'm just gonna only open it up to like a month at a time, or 2 months at a time. I think that's going to be more sustainable and easier to manage, and potentially more lucrative too. Hey, JF is here. Says, I just looked into traveling nurses. According to my cousin who is a nurse, many of them are staying with family. Ooh, and pocketing the stipend. That's a good deal. So this is the Wall Street of Miami here. We'll head back because it's already almost going on 2 hours. But if you guys have enjoyed the live stream so far tonight, feel free to hit the like on the video. Subscribe to the channel if you are new. It's going to be a busy week ahead on Wall Street. We do have Nike reporting earnings, by the way. So we'll do a deep dive into that. I'm more focused on Nike's forward guidance more than their current quarterly earnings report. And the reason for that is because we've been talking about how the S&P 500 right now is trading roughly at 16.6 times forward earnings, which is actually historically below trend. Now, the problem with that is I believe that the majority of the decline that we've seen across the major equity indices, like the S&P 500, the NASDAQ, the Dow Jones Industrial Average, has been due to interest rate increases via the Fed and not so much earnings revisions as of yet. So if Wall Street really starts to bring down their forward earnings estimates for the S&P, and companies also start to forecast declining earnings, I think that's when you're going to get your additional discount to the downside. So the point of that is, technically, the S&P is trading at 16 times forward earnings. But if we have a wave of earnings revisions to the downside, well, then maybe that 16 is actually 20, and the market needs to discount even more to bring it down to the real 16 times forward earnings, if that makes sense. But I'll write about it a little bit more in the newsletter. Hey, Iris Lou is here. Good to see you. Hope you had a good weekend. And obviously on Wednesday and Thursday, probably not going to be live streaming because we have a big hurricane coming. Now, granted, we're not going to get it here in Miami, thank God. Hurricane Ian seems to be making its way to the panhandle of Florida. So you could think about Pensacola, Florida, things like that. But supposedly we're going to get about 6 inches of rain, which means this entire area that we're walking right now is probably going to be totally submerged in water. When we get those really, really torrential downpour rains, anywhere in downtown Miami, sort of near the 1000 Museum building, anywhere near the Brickell City Center, literally there's probably going to be a foot of water in the street. So we may not be streaming that. Brevard County Real Estate says Ian will probably make its landfall north of Tampa, Florida, on its way to Jacksonville. Hey, Monique says, thank you for sharing your knowledge. You may get rain bands from the hurricane. Fill your bathtub. Yeah. The problem with that, Monique, is I don't have a bathtub. I only have showers. But I do probably have about maybe a week and a half of water. So I think I should be good. Hey, the Ellery Ones has really enjoyed the stream, first time here. Well, thank you for joining. So we usually do these live streams about 5 days a week between New York City and Miami. So if you enjoyed it here, we'd like for you to come back. So Monday through Friday, we usually have a dedicated stream to a specific topic as it relates to the financial markets. Saturdays, we sort of just walk around and hang out, but Sundays is the markets, a look ahead stream, where we sort of cover day by day the main events on Wall Street. Yeah, lay this, just shower now and do all your laundry. I did all the laundry today. It's a good point. So all my laundry is done. Yep, Brevard County Real Estate says the water is for flushing the toilet. So I have one of those 5-gallon buckets, like those Home Depot buckets. So hopefully that will suffice. Now, when I bought my piece of property down here in Southern Florida, I think I told you guys where my original purchase was going to be. And that was in a location called Normandy Shores or Normandy Isles. Now, it was a little bit out of my price range because obviously during the pandemic, that specific neighborhood of Miami literally tripled in price. But also, Normandy Isles, Normandy Shores, really whatever you want to call it, is in a really, really bad flood zone. Now, where I bought, I think it's literally the only square mile in Miami-Dade County that is in flood zone X. Now, many of the real estate agents that I've talked to here, and again, this isn't to sound negative, but there's tons of unbelievable, outstanding real estate professionals in Southern Florida that are rock stars, and I've been working with one. But some of them that I've worked with are, oh my God. They're like, oh yeah, the house is in a flood zone, but no worries, just pull the trigger anyway. Don't even worry about it because you have flood insurance. Yeah, no thanks. You really, really got to watch that. Okay, just because you have flood insurance, okay, long story short, do not buy in an area that's notorious for flooding. Okay, and I think all the people from Florida who are familiar with Southern Florida know those specific locations that are really, really flood prone. If you're gonna buy a condo or an apartment that's 80 stories in the sky like this, okay, maybe you don't have to worry about the flooding, right? Because the water is definitely not gonna get this high. But if you have a ground floor, single family, duplex, triplex, do not buy in a very, very egregious flood zone, and ask the neighbors. I would go door knocking, door to door, and ask the neighbors, hey, during the past 15 years, how bad has your flooding been? Because in some of the nicest parts, like in North Beach, from 72nd Street to 79th Street, which is by far my favorite place to go to the beach, if you're in Miami, North Beach, all of those houses get murked with the flooding. And so do the storefronts. You know, even if it's just a real torrential downpour, you could have, 2 or 3 inches of water in the stores there. So you've got to be really, really cognizant of that. So. Yeah, Ace587 says the June 3 Brickell flooding was bad. I think I saw videos of that on Twitter where the cars were literally submerged in water from that. But there are some neighborhoods in Miami where it just doesn't flood, man. It doesn't. Hey, Dusty Cole. My good friend Dusty, good to see you. Thank you for joining today. Hey, Carlos is here. Says, hey, Tom. Yeah, down big time. Would I buy property in the UK? Me personally, I would not. But that's just where I'm at in my life now. Maybe when I'm a lot older, maybe, but I think the regulatory environment would have to improve in the United Kingdom in order for me to invest money in real estate over there. But yeah, I mean, that's one of those things that we've been talking about too, is this dollar strength is absolutely unprecedented, and it's acting as a wrecking ball to emerging markets. Because think about it like this. If you are an emerging market country, we're getting locked in. If you're an emerging market country or a company and you have dollar denominated debt, and I think we could still go out the store, we'll see. I think we can. So if you were an emerging market country or an emerging market company and you have loads of dollar denominated debt, well, here's the problem. As the dollar gets stronger, I think as of recording this video, the Dixie is what, trading at 113? Well, chances are your native currency is getting freaking creamed. All right, so that means your dollar denominated debt is going to be that much harder to service. And what we've been seeing around the world, especially in these very, very small emerging market countries, is that they've been having to dip into their strategic reserves of dollars and other stronger currencies to protect their own. So if we think about going into Q4, the last 3 months of the year, this is really when the budgets are done for next year. And with the dollar strength so high, I mean, just imagine all these emerging market countries, you know, they may need to cut healthcare costs. They may need to cut other necessary spending in order to allocate more of their monetary resources to servicing their dollar debt. So it could be very, very difficult for these emerging market countries and companies going into next year. And this has also created sort of like an endless feedback loop as it relates to monetary policy, because the Federal Reserve has had to raise interest rates in order to kill off inflation, which has then sent treasury yields or yields across the bond market in the United States higher. So this has said to global investors, wow, you know, US debt is now actually yielding a pretty nice return. So it's acted as like a liquidity suck to the United States, driving up even more the demand for dollars. So in order for other countries to sort of stay competitive and keep up, their central banks have to raise rates, right? So it's not just the Federal Reserve. This is central banks globally that are going through quantitative tightening, excluding the Bank of Japan and excluding Turkey. We talked about the Turkish lira making a new all-time low, I believe. But we'll talk about that a little bit later. Austin city limits. Tom, check the battery percentage on your phone. Ooh, thank you for that. I'm at 10%. So you know what, team? We'll end it here. I want to say thank you to everybody who came out for the Market to Look Ahead live stream tonight. Appreciate it very much. If you enjoy sort of this financial conversation and the live streams, if you scan the QR code on your screen, I write a free investing newsletter, usually every other Tuesday after the market closes, where I share my thoughts on not only emerging markets, US equities, real estate, fixed income, and the like. Join us over there at the Behind the Street newsletter. If you're new here, feel free to hit the subscribe button and hit the like button on this video. And I will see you all tomorrow, hopefully. Now, I want you guys to have a fantastic start of the week. You got to hit the ground running hard. You got to keep a positive outlook. So I want you to breathe fire on Monday tomorrow. And we'll see you at 8:30 Eastern Time, live from the Magic City, the beautiful Miami before the storm. So Disney Hatch, thank you so much for joining. GX72, Mohammed, thank you. Joe C, thank you. Andreas, I appreciate you. FredX, Ryan Royal, Brevard County Real Estate, thank you for your insight. Latha, thank you for being a great moderator. Andy from Korea, thank you. Ace587, DWG, the Ellery 1, Austin City Limits, D, and all of those chatters I couldn't get to. Western Mass Dave, Sally, Julia, and to the Mighty Bull. Have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. Dan Zhang, thank you so much. And to all of our Jewish viewers, it is Rosh Hashanah. So wishing you peace and prosperity during your holiday. Please enjoy it. Stay safe, and we will see you all tomorrow. Thanks, everybody.